Welcome back to Now Media Biz Talk. I am your host, Rachel Weaver, and I have a very special guest, Jake Linville. Jake, it is such a pleasure to have you with us today. I am excited to dive right into our topic today because we are going to be talking a little bit about financial planning and the parts that a controller can play. So I'm going to dive right into these questions. Jake, tell us, what role does a controller play in an organization's financial management and decision-making process?
So a controller, depending on the size of the organization, well, if it's a very large organization, they usually report to a CFO or chief financial officer. But if it's a smaller organization, they usually are the controller, the CFO. They do all of the financial planning and analysis. They do the budgeting. They make sure that there are internal controls, which means that there are controls in place so that people don't steal money, customers don't not pay. No, it's a double negative there, but make sure that customers are paying. Make sure that we vet customers and vendors to make sure that they will pay and they will deliver. They also work with the tax team if they're not already preparing the tax return to make sure that the tax team can get whatever they need to prepare the income tax returns. They also interface with ownership and management. They are basically the cog that holds everything together. I mean, I know I may be biased because I do this work, but they do. They are the backbone of the organization on the financial side of the company. Make sure that everything runs smoothly, and you have a good controller when you don't really have to deal with them very much, or well, not deal with them, but you don't have to bring a lot of problems to them. Problems are solved before they're even realized.
Mm. Very good. Such and great information to understand. So tell me, how does financial planning and reporting contribute to transparency and accountability of an organization? And what are the key components of effective financial reporting?
Sure. So financial reporting contributes to the transparency of the organization through a couple of ways, depending on what size of organization you are. If you're publicly traded, which a lot of the viewers here are not, but if you are, they assist the financial reporting team to make sure that the financial statements have all of the information, and they present financial and non-financial information. So when I say that, basically means you've got all your numbers on your balance sheet, your income statement, your cash flow statement, but then you have notes at the end of your financial statements that are in paragraphs, and they explain things that aren't so readily apparent by just looking at the numbers. And so they help explain a lot of the policies and procedures and things that are coming up, warn investors or encourage investors by saying, hey, this is what's happening. These are the obligations that we have that are coming up. Okay. So the key components of effective financial reporting are, well, one, making sure that you have systems that talk to each other. So, for example, if you're using QuickBooks Online, you have your POS, your point of sale system, connected directly to your QuickBooks or whatever solution that you're using for your accounting. And then you've got your operating system. So, like, for example, if you are manufacturing something, that system is somehow connected into your accounting system so that all of the data, all of the individual transactions pass through the system so that you can actually see and have visibility to everything that's happening within your organization. And the best ways to do that are to hire someone like myself that can come in and help you take your manual processes and convert them into electronic processes that help you refocus your employees' attention to more strategic, more important, value-added activities rather than just processing paper.
Very good. So, can you tell me what are the primary purposes of budgeting and forecasting in financial management? And how do these processes aid in strategic planning and resource allocation?
Financial planning and budgeting, those lead into making sure that you have. So I actually heard a really good explanation the other day. So like we're in the new year, and so a lot of folks have New Year's resolutions. A resolution is just a goal, to boil it down. So
Mhm.
you've got a goal and then you've got a plan. A lot of times people think goals and plans are the same things, but goals are what you want to achieve and plans are how you get to your goals. And so that's essentially what budgeting and forecasting and planning does. So you can say, okay, what is our end goal? We want to achieve X, Y, and Z this year, or this quarter, or this month. And then you can back into that plan. And there are a lot of non-financial, and then there are a lot of financial things. So if you want to have more capacity in your manufacturing business, you may need to purchase more equipment. So you're going to have to say, okay, do we have the funds available to purchase that equipment, or can we finance it somehow? So do we need to get a note, or can we lease the equipment? And so that's how so you say, okay, we want more capacity, but how do we get there? And so that's where you put your non-financial and your financial together into one plan that gets you to your end goal.
Mhm.
I hope that helps.
Yeah, no, that was great information. So, can you tell me what are the internal controls crucial for ensuring the accuracy and reliability of financial information? And what are some common examples of internal control measures?
Sure. So internal controls are crucial to an organization. So internal controls may sound like this weird word that people use. So basically, all it is you foresee a problem, or you have a problem. Like for example, internal controls around your cash. So in an ideal world, you wouldn't have the same person collecting cash or checks or payments from customers, and then also that same person reconciling the bank statement every month, because there's nobody else having their fingers in it. So what you can do, I know a lot of the folks that are viewing are smaller businesses. So what you can do is try and segregate those duties. And if you aren't able to segregate, you can hire someone like myself to help make sure that you have those controls in place. So if you only have one person in the back office collecting cash and payments from customers, you can make sure that we have a separate control where someone else reconciles the bank statement every month.
Very good. So tell me, how does financial analysis contribute to informed decision making within an organization, and what key performance indicators are often used in financial analysis?
Financial analysis leads to good decision making within an organization by providing. So instead of just going with your gut and saying, okay, I feel like this is what's happening in the business, you can actually look at numbers. Numbers tell a story. No matter what story you want them to tell, they're going to tell you what's actually going on within the organization. So like the example I was giving earlier. So um, where someone wants to expand their manufacturing capacity. Okay, well, do we have the funds to do that? You can look at your financial statements or your bank account and look at those numbers, and you'll know, well, if I have the funds to do that. And then the analysis part comes in where, like, for example, you can take a look at your last 12 months, your last 24 months, your last 36 months and show, okay, over time, this is what I've usually experienced. So you can use that as a baseline for your budget for the upcoming year. And I would say that financial analysis would allow you to know how well you're meeting your obligations. So are you able to take the cash that you have on hand and meet your obligations? Are you able to continue as a business for the next 6-12 months? If you don't take a look at your numbers, you may not know that you aren't doing well.
Mm-hmm. Such great information and so true. So tell us, how can people find you?
Sure, they can reach out to me at bookmycpa.com. And you can also email me at Jake, Jake, at bookmycpa.com. Our phone number is 406-480-6622. We're in January now, so there's a tax season's coming right up. I've got a 25% off deal going on for new customers. If you go to my website, you can go to my store in the middle of the page. If you find a service that you would like to have me help you with, just put in the code TAX, TAX, and I'll help you get to where you need to be, whether that's getting your tax returns done or getting controller work done.
Great. Thank you so much, Jake. Appreciate you being on the show. Look forward to having you again very soon. And with that, we will be right back after this commercial break.